what do we need to talk about? Many facets to the story, but what's the biggest takeaway you think that we should focus on here when it comes to the China side of?
First of all, the 50 billion kind of the impact, basically the first round tariff, the macro impact on China is going to be minimal. I mean, by our estimate, we're talking about probably around 0.1 percentage points of the GDP. So it's not something really meaningful in terms of a macro perspective. Of course, the corporate sector will probably, for those which are unlucky enough to be included in the list, probably you'll feel more painful. But it's not the kind of macro kind of the issues. But however, I think what we need to be aware to focus on is the growing risk for escalating to second round of a tariff. If we were talking about 200 billion, as President Trump already threatened, that probably will have a more meaningful impact in terms of China's kind of China's GDP growth. By then, probably the policymakers will have to think seriously how to basically respond, not just in how to respond to come out with the equivalent size of a tariff against the U.S., but more importantly, how they're going to basically respond to the most of the policy front in order to make up for the losses of this kind of tariff kind of the shock.
Do they not have to step in already now? And the reason I ask you that is, we talk to a lot of businesses,
yes,
traders, investors,
yes,
banks, what have you, on the mainland.
Yes.
And credit conditions are already tight, and they're tightening to begin with. I mean, should the PBOC come in much stronger now, even without considering the escalation of the trade conflict?
Definitely. I think actually, yes, the financial condition clearly get much tighter now compared with 6 months ago. But this is nothing to do with the trade war. It's mainly kind of policy reduced. It's basically a reflection of Xi Jinping's kind of de-risk campaign, and particularly curb on the shadow landing. So as a result of this, as a consequence of this, we get overall financing conditions get tighter. I think actually PBOC has already realized that. That is why we already see the triple cuts. I think this is not going to be the last triple cut we're going to see. I mean, we should see more triple cuts going forward, if just for basically to ease the credit condition a little bit, so that to make sure that the overall economy is not going to hit too hard by the de-risking campaign. And now on the top of that, we get the growing risk of the trade war get escalating. I think that giving another reason for PBOC to act even more more decisively.
Hongbin, we were talking about the economic structure of the trading relationship with the US and China, and earlier on Air Force One we heard from President Trump saying that the total amount of goods targeted by tariffs could be up to 550 billion. I want to bring up this chart in our GTV library that is clearly way more than what China actually exports to the US. China can't even retaliate to the tune of half of that amount, right, which has been apparently is what the USTR is investigating, whether they can put tariffs on $250 billion worth of goods from China. So how does China retaliate, and how does this kind of maths compute?
Yeah, I'm absolutely right. It'll be hard for China to fund 500 billion of the U.S. imported product to tax on. So what China is going to do, likely to do, if they decide to retaliate at the same magnitude, apart from this kind of tariff, impose some tariff on the U.S. import goods, but probably one of the likely area they're potentially going to target is basically U.S. companies in China operating in China. And let's bear in mind that every year the U.S. company in China actually has sold more than 150 billion US dollars kind of the product in China. So this is also potentially, if China decided to have kind of tough retaliation, probably the US company operating in China will probably become a casualty as well.